Welcome to Q&A Friday. I'm your host, Stan, the Annuity Man, America's annuity agent, licensed in all 50 states. Today's question is, hey, Stan, the last time that the Fed raised rates, why didn't annuity companies just immediately raise all of their rates? I thought that's how it works, Dad. It doesn't work like that. Let me tell you how it works with annuity companies. Now, with banks, they're looking straight at the Fed. They're like fixated on the Fed. They're in love with the Fed. They're enamored with the Fed. Life insurance companies that issue annuities, they glance at the Fed, they walk past the Fed, go, yeah, whatever. Because they're pricing their products on a lot of things, not just the Fed interest rate. I know that's not what cable says. I know that's not what financial journalists who don't know what the heck they're talking about say. And I know that's what your master of the universe person that's managing your money, when I hate all annuities, are all expensive. They're idiots too when they talk about this. This is the truth about how it's priced. Annuity companies, they look at current interest rates, but that's only one of, say, 5 legs of a pricing stool. Here's the other legs. They sell life insurance products, so they price things off that. They sell lifetime income products, they price things off that. They have a legacy bond portfolio, Jimmy Carter bonds, Barack Obama bonds, George Bush bonds. I mean, they got bonds in there from forever, okay? Then they look at the Fed, and then they look at what's called capacity, meaning that if enough money's coming into them, they're not incentivized or think it's needed to raise the guarantees to attract you. Right now, with over 11,000, it used to be 10, but now 11,000 baby boomers reaching age 65 every single day, there is an absolute tidal wave of premium, i.e. money, flowing into the annuity companies. So yes, they do look at the Fed, but they look at other things too to price it. They also look at capacity. Give an example. When the Fed recently raised rates by 75 basis points, at the time of this taping, you can just kind of look at 2022 and remember when that was. We had 3 annuity companies lower their guarantees that same day. And people are like, why is that happening? That doesn't make any sense. It's because they'd reached capacity. It's because they had reached whatever goal they have to bring in money for that specific MIGA tranche or that specific immediate annuity tranche. They're trying to attract specific age ranges. They'd hit that number. So they didn't want any more money coming in. So they lowered the guarantee so not to attract it, which leads me to my other point. That's the reason that here at The Annuity Man, the #1 seller of annuities on the planet, we represent pretty much every single carrier because these are commodity products. Some carriers are going to be higher than others, and it is fluid. It's always changing. But I hope I've educated a little bit about the Fed rates and what moves the needle with annuity companies. A lot of it is them attracting premium and what it takes to attract your money. It's not linear. It's not what you think it is. When the Chairman Powell does something, doesn't mean that the annuity companies are going to follow in unison or at all. Some will, some won't, but that's the reason that you have to look at annuities of all types as commodity products and quoting for the highest contractual guarantee at that time, okay? And I always say quotes are kind of like a gallon of milk. They change every 7 to 10 days. There's not one annuity that's better than the other. There's not one company that's better than the other. We can get down in the weeds about the ratings and all that stuff. But when you're looking at annuities properly for the highest contractual guarantee, you have to shop all carriers. Hope that answered the question. I'm sure it did in a very Southern, factual way. See you next week.